Hey everyone, welcome to another weekly market outlook. This is for the 5th to the 9th of December 2022. My name is Vito, and let's get started by taking a look what's been going on last week. So we've got EU inflation cooling off a little bit. We've got the flash CPI number coming in at 10% versus 10.4% expectations, and a significant decrease from the previous month's 10.6%. EU core CPI, however, remains the same at 5%. This is excluding gas and auto, so an indication that, food prices are actually still going up in the eurozone. Okay, so next up we've got the US core PCE. This was down 0.2% versus 0.3% consensus, so we are looking at a little bit of a decrease in the personal consumption expenditure here. The ADP NFP and the US NFP both actually exceeded expectations, with ADP gaining 239,000 versus 200,000 consensus. The US NFP is 284,000 versus 200,000 consensus. However, this is probably the reason why one of the reason why the US probably didn't gain so much. The NFP numbers was high, yes, but the unemployment rate actually remains unchanged at 3.7%. On top of that, we've got the US ISM manufacturing numbers. That's dipping below 50 for the first time at 49. This is lower than the 49.8 consensus. So we are looking at a little bit of a contraction in terms of manufacturing in the US. And also we've got Fed Chair Jerome Powell basically confirming that the FOMC will be slowing down the pace of interest rate hikes effective immediately, basically in their next meeting in December, which is not this week, the following week. Okay, so JP also points out that the decline in inflation needs further data to confirm, as per usual, and even though inflation has eased off, remains high by any means of measure at this point in time. So with that, let's quickly take a look at what's in store for the fundamentals this week. So we've got the Monday numbers. Pretty quiet. Actually, we don't actually have any high impact news this week. We've got the Global Services PMI, the S&P Global Services PMI for the Eurozone. So we've got all of them pretty much still going to be below 50, right? Not really much of a change from the Eurozone. We've got the US ISM non-manufacturing PMI, which is basically the services PMI. This is expected to drop to 53.1. If we see a drop below 50, then obviously we are going to be looking at a little bit of contraction in the services industry in the US. So for now, the Eurozone, both of them are already below 50. The US side of things, PMI already dips below 50, just dipped below 50. Services PMI at this point in time is expected to come in above 50, so we'll see what happens there. Key point next would be on Tuesday, which is the RBA interest rate decision. Right, previously at 2.85, the consensus was for a jump to 3.1%. So this is a slight hike, not really a huge jump in terms of interest rate hike, just a 25 basis points hike coming out from the RBA on Tuesday, tomorrow. All right. Other than that, we actually don't see any high impact news in the market. The balance of trade and stuff like that. This is towards the end of the year. Really doesn't carry a lot of significance. The next key data would come out from Australia, which is the GDP growth rate, right, year on year for the third quarter. The previous number was 3.6%, and the consensus is really high. It's expected to come in for the year on year. It's expected to come in at 6.3%. Now, a huge jump. All right, but if we take a look at the quarterly numbers, we are looking at a slight dip on the quarterly numbers, but still good in terms of the GDP growth in Australia. Bank of Canada interest rate decision, again, potentially looking at a 50 basis points hike coming out from Canada. That's on Wednesday. Other than that, not really much. We've got the Japan GDP numbers, with quarterly numbers. We are looking at negative numbers here towards negative 0.3%. Year-on-year annualized final GDP numbers would be a drop to negative 1.1%, but shouldn't create a huge impact in terms of the yen movement here. Other than that, we've got the PPI numbers pretty much wrapping things up for Friday, right? Consensus was to remain neutral at 0.2%. Michigan consumer sentiment expected to jump up a little bit to 57. So that's pretty much it in terms of fundamentals for this week. Nothing really major at this point in time. Next week, it's going to be a huge week. So I'm just gonna give you a quick preview of what's to watch out for next week. We got UK numbers, obviously, good of trade balance, and then on Tuesday we got the unemployment numbers coming out from the UK. But Tuesday, US side of things, we are expected to see inflation number come in again. Okay, so the US inflation number is going to get posted. US and UK inflation number are going to get posted basically a day before Fed is going to be hiking interest rates. So this is going to be interesting, but this is actually not for this week. This is going to be for next week. So just a quick little preview of stuff to come. All right. Let's take a look at the technicals very quickly. This is on the dollar index. Dollar index is already below 105. We have a confirmed close below 105 on Friday. So right now, in terms of trajectory for the dollar index, the next key support that we could potentially look at, we might see a little bit of a minor support coming in at 104, 103. But if those are easily taken out, then we look towards 102, 101 on the dollar index. So the mood here right now is that after Jay Powell basically confirms that yes, they are going to be slowing down the pace of interest rate hike, we're seeing a little bit of a resentiment flowing back into the market. So this is slightly dollar negative, and we are looking at a potential market movement where the dollar might get pressured a little bit more, not by a huge margin, but probably just a little bit more. Okay, but that would be the tone going forward this week. Okay, moving on, we've got gold. Momentum wise, everything seems to be good. We're not really on the overbought condition yet for gold. In terms of trajectory for gold, we do still have trajectory towards 1825 for gold, and that would be in line with the weekly resistance one at 1821. The current pivot is actually around 1780, so you do expect support to come in around 1795. We are just barely above that 1800 level in terms of resistances to the upside. We got 1825. Beyond 1825, we've got 1840 towards 1850 for gold. That would be the estimated range in terms of resistances for gold this week. In terms of support, we've got 1795, and below 1795, we pretty much saw the next support being available at around 1750. So huge drop. Huge gap in terms of support sizes here. All right, moving on, we've got the Aussie USD. Aussie USD, it's this one here is a little bit unique because this one is dragging on along, and there's a little bit of a concern here. We have this transition above the Ichimoku cloud. We do see bounces off that Ichimoku cloud. We do see bounces off the 66.75, 67 key support level for Aussie. But taking a look at how it actually opens in the market, it actually gaps down and then pushes up higher. So in terms of range, still doesn't indicate any huge, major increase to the upside. In terms of resistance right now, resistance one for the weekly is going to be around 68.80, very close to 69 cents. So we are actually just going to round it up to 69 cents as resistance. 68 cents will play a role as a pivot for this week. In terms of support one, we are obviously looking at that previous range again, 66.75 to 67. So this is still range bound, but it's gradually pushed to the upside. If you're planning to trade the Aussie USD, if you're expecting to target 70 cents this week, might be disappointed because in terms of how it actually progressed, this is going to be a slow grind to the upside for the Aussie USD. But if this is something that you are familiar with, then yeah, stick to the 50 pip range for Aussie USD. That's basically how we are going to navigate the Aussie USD. Okay, next up, it's the Euro USD. This one here has taken out 1.05, so very similar to the dollar index here. This was taken out a day before the dollar index actually transitioned below 105 level. So we got the Euro USD above 1.05, very close to 1.06. In terms of momentum, does it have more room to go? Yes. This one here is slightly a little bit overextended. Several key levels to watch out for in terms of resistances. Obviously, we are going to be looking at around 1.06. That would be the first resistance to come in through. That's basing off the June highs. And then beyond that, we are going to be looking at around 1.0775 actually. Very close, right around there. So this would be based off the June high. So so in terms of resistances, we do still have limits in terms of Euro USD. We're looking at June and July highs, but beyond that, it's really a huge jump up. on the Euro USD, because beyond those June July highs, we are literally staring down at 1.1 and 1.11 on the Euro USD. So again, with what Jay Powell has basically said, I think what we're looking at is a little bit of a risk positive market. We are potentially going to be looking at further recovery on the Euro USD here for this week. Okay, next up on the Pound USD. The Pound USD has also broken key levels. The projected resistance last week was actually 1.23 on the break above 1.2150, and we have already seen that happen. Right now, price is actually trading above 1.23. We do have a little bit of a resistance coming in at 1.24, but beyond 1.24, we actually don't have anything significant until about 1.26. Okay, so if we go by 1.26, okay, that would place it around the June highs for the Pound USD, and beyond that, obviously, we don't have anything else. So a very similar situation with the Euro USD. Beyond 1.26, we are actually looking straight at 1.3, 1.31, 1.32 on the Pound USD. So overall sentiment remains to the upside, trend likely to remain so for the Pound USD. Now let's wrap things up with the dollar yen, because this one here has been something that we have been waiting for. So just to recap, we do have that support trend line, and then we have the key 138 yen. Those levels are taken out basically on the back of Jay Powell's comment. We've lost 138, we've lost 135. The next the next support level that has any significance, it's basically around 132, and that's going to be in line with the weekly support one pivot, okay, for the dollar yen this week. So the momentum still points to the downside. We are likely going to be seeing further grind to the downside. In terms of pivot for this week, it's going to be at 136. In terms of resistance, it will be at the previous support at 138. For now, we are pretty much really dropping down on the dollar yen here. So projection for the dollar yen is likely towards a movement towards key support level at 132. Okay, with that said, good luck for your trades, and I'll see you soon.